For years, Afranga served as a funding source for the lending operations of the Stik Credit Group, an established and profitable fintech company from Bulgaria. In this setup, investors were able to reliably achieve above-average returns of up to 16% in recent years. Prompted by its licensing as a European crowdfunding service provider, Afranga has now initiated an interesting transformation into a regulated peer-to-peer marketplace. On one hand, this opens up more opportunities for expansion, revenue growth, and diversification. On the other hand, it also increases potential risks for us investors. Today's 360-degree analysis of Afranga will cover all the risk elements that investors need to be aware of before making an investment. In addition, I will also address the current shareholder structure, the financial situation, and all investment-related topics such as the loan offering, expected returns, and the missing buyback guarantee. A quick disclaimer up front: please note that this Afranga review is based on my personal research and does not constitute investment advice. There is no liability for the accuracy of the following information and neither for any investment decisions that may result from it. Afranga was originally established in 2021 by the Bulgarian company Stik Credit as a financing tool for its own lending operations. Its origin story is therefore quite comparable to other peer-to-peer platforms such as Lendermarket or Esketit. Since receiving its license under the European crowdfunding regulation in 2023, Afranga has been operating as an independent peer-to-peer platform, although its personnel and operational structures remain closely linked to Stik Credit. A good example can be found when looking at the platform's ownership structure. The Afranga platform is officially operated by the Bulgarian company Afranga EOOD. A look into the Bulgarian business register reveals that Svetlin Nikolov-Sabev, CEO and founder of Afranga, is also the sole owner of the peer-to-peer platform. He is considered an experienced entrepreneur in the fintech sector who has been working with Stik Credit since 2018 and also co-founded Lendivo, the first new loan originator on Afranga. Next up, let's take a look at Afranga's business model and its financial setup. Similar to other peer-to-peer marketplaces, Afranga primarily generates revenue through referral fees charged to loan originators. According to their pricing list, this fee can be as high as 10%, although in reality, this number is most likely closer to market average between 2 and 3%. In addition, loan originators are being charged a €3,000 fee for evaluating a potential partnership. On the other hand, investors are not subject to any cost or fees, which unfortunately is no longer a common practice these days. Since the platform only began full operations under ECSP regulation at the beginning of 2025, there are no financial statements available yet. When asked about it, the team stated the aim to reach break-even is by the end of 2025 or during the first half of 2026. Due to the close connection to Stik Credit, it also makes more sense for investors to take a closer look at the financial situation of the Bulgarian partner anyway. According to the financial results for 2024, Stik Credit achieved a record profit of approximately €3.5 million, proving once again the long-term profitability of its business model. Also, the balance sheet appears to be consistently strong, indicating a financially solid foundation. The equity ratio stands at a strong 54%, the debt ratio is at a manageable 0.85, and the liquidity ratio at 1.62. One aspect worth noting though is the increase in impairments on written-off loans, which most recently amounted to €5.1 million, which translates to roughly 1/3 of the entire loan portfolio. For comparison, in a conservatively run consumer lending business, the default rate often ranges only within 5 to 15%. A rate above 30% either suggests a highly risky loan portfolio with many non-performing loans or a conservative accounting policy involving large provisions to cover potential defaults. Stik Credit itself states that the increase is partly due to the growth over the past year, with around 30% more loans being financed than in 2023, and partly due to a shift in the loan structure, which could indicate a higher proportion of short-term or riskier loans, resulting in higher provisions. Next up, let's take a look at how the platform works from an investment perspective. The loan offering on Afranga is currently coming from 3 different loan originators, with additional companies expected to join in the future. Stik Credit is a Bulgarian company that was founded in 2013 and which is regulated by the Bulgarian National Bank. Since its inception, Stik Credit has built a sustainable and profitable business model focused on unsecured consumer loans, with over 30 million euros in loans being financed. On Afranga, these loans are offered with interest rates between 14 and 16% and terms of up to 36 months. Lendivo is also a Bulgaria-based lender, which was founded by a team of the Stik Credit company, including Afranga CEO Svetlin Sabev, in April 2024. The business model consists of issuing installment loans of up to 500 euro with terms of up to 30 days. The third lender is Swiss Funds, a Czech loan originator that has specialized in short-term consumer loans since 2022. On Afranga, these loans are typically offered with interest rates around 11% and with terms of up to 18 months. The expected returns on Afranga are largely depending on the interest rates and the portfolio quality of each loan originator. Loans from Stik Credit are typically offered with rates between 14% and 16%, which is a few percentage points above the market average. In contrast, the newer and external loan originators are offering returns in the range of 10 to 12%. A more unusual aspect for consumer loan lenders is the fact that there is no buyback guarantee being offered for investors. This is primarily because under the ECSP regulation, Afranga has shifted to offering investment opportunities in business loans rather than individual receivables. This means that investors are lending their money directly to the lending companies themselves, while these loans are backed by total assets of the respective businesses. As a result, the maturity periods of these business loans are significantly longer, ranging from 12 to 36 months, compared to the actual loans issued to the end borrowers, which often have much shorter terms. What's currently missing is the auto-invest feature and the secondary market, although both of them are expected to be reintroduced later this year. Regarding taxes, it's important to note that interest income from investments made through Afranga is generally subject to withholding tax. The applicable withholding tax rates vary depending on the country where the respective loan originator is based. For instance, loans from Bulgaria are subject to a 10% withholding tax. The applicable tax rate is automatically applied based on the loan originator's country of origin. The amount paid out to the investors is therefore reflecting the net interest after tax. Next up, let's address all the risk elements that are associated with Afranga, starting off with the platform risk. In its home market, Afranga is regulated and supervised by the Bulgarian Financial Supervision Commission. In September of 2023, the FSC also granted Afranga a license, allowing it to operate as a service provider under the European crowdfunding regulation. This means, among other things, that client funds must be properly segregated, protecting investors from potential misuse. For this purpose, Afranga cooperates with Lemonway, which provides individual IBAN accounts for investors. In the event of Afranga ceasing operations, investors would still retain access to their funds and loan repayments could continue. Due to its regulatory status, Afranga must also meet high compliance and transparency standards, which increases the overall security of the peer-to-peer platform. However, potential loan defaults or issuer insolvencies are not covered by the regulation. Furthermore, investments made through Afranga are not protected by any European deposit guarantee schemes. This means that unlike traditional bank deposits, funds invested on Afranga are not insured or guaranteed by any national or EU compensation system. The risk of capital loss is therefore a possibility, even though the claims against the loan originators remain and can still be pursued legally. Regarding the analysis of loan originators, Afranga has a firmly established mechanism in place to assess their performance. This process ranges from legal due diligence to financial analysis. Following this analysis, specific financial requirements are defined, such as the equity to debt ratio, the interest coverage ratio, or the liquidity reserves. Additionally, the loan originators are subject to continuous monitoring to ensure that their creditworthiness remains stable over time. Regardless of Afranga's internal due diligence, investors should also independently review the annual financial statements of the respective loan originators, which are available on the platform. What you can see here is a short summary from my personal blog, whereas additional information is shared in my community channels on Telegram and WhatsApp. In our peer-to-peer community, Afranga has consistently received average ratings over the past 3 years, both in terms of overall score and ranking. 2 years ago, Afranga achieved its best result so far with 7th place and a score of 3.56. This year, the platform still managed to reach 16th place with a decent score of 3.07. To wrap up this video, I want to share my provisional conclusion regarding Afranga. In its early years, Afranga served exclusively as a financing tool for the Stik Credit Group, an established and profitable fintech company from Bulgaria. This structure has presented a predictable risk for many investors, offered with above-average interest rates. With its restart as a licensed and regulated crowdfunding company, Afranga has significantly gained in security, both legally and operationally. The strategic expansion into a broadly positioned peer-to-peer marketplace opens up new revenue and growth opportunities for Afranga, but it also increases the risk for us investors. While Afranga maintains a close personnel and structural connection to Stik Credit, comprehensive control over external third-party loan originators is considerably more difficult to achieve. Therefore, investors should carefully examine the situation of each loan originator separately. If Afranga is a suitable addition for your portfolio largely depends on your personal strategy and your risk appetite. If you are looking for a regulated peer-to-peer platform outside the Baltics with a solid track record and above average return expectations, Afranga might be a reasonable choice to consider. Personally, I have established an initial position of 3,000 euros investing exclusively in assets by Stik Credit. Although the loan terms are slightly too long for my personal taste, I receive above average interest rates in exchange, which I consider a good compromise for such an established and profitable fintech company. What is your personal view on Afranga? Please let me know your feedback in the comment section below. And if you consider to invest on Afranga as well, then please do me a favor and use the sign up link in the video description below, which will enable you to get an additional 0.5% cashback bonus for the first 90 days after registration. Thanks so much for your attention today, and I look forward to see you guys again in the next video. So long. Bye bye.